Hello everyone, myself Vaibhav. In today's session of Market Movers, we are going to consider the change in trajectory of Euro USD. After yesterday's FOMC monetary policy announcement, we saw the Euro USD making a sharp reversal, and in today's session, it is now increasingly looking like that the bears are going to take over, and we might see Euro USD dipping towards 1.17 zone in coming session. So we will see what are the emerging opportunities because of this change in trajectory of the Euro USD. We will go into the technicals of that. If you consider the fundamental trading context for the day, we had monetary policy announcement coming in from Bank of Japan and Bank of England. Prior to that, we got the employment figures for the Australia, and here, contrary to the expectations, we saw the reduction in unemployment in Australia, and now for the month of August, the unemployment rate has declined to 6.8%, whereas almost more than 100,000 jobs, including full time as well as part time, were added in the Australia's economy, and because of that, we saw this reduction in the unemployment rate. Moving on to the Japan, we got the Bank of Japan's interest rate decision, and here, as expected, Bank of Japan has decided to leave the interest rates unchanged at 0.1%, and it will be targeting the government bond rates at around 0%. So we don't really see any kind of change happening in the monetary policy of Bank of Japan anytime soon. But one key thing is that the Bank of Japan has upgraded its view on the Japanese economy, and in light of the recent economic data, which has been better than the expectation, so the Bank of Japan is expecting the gradual recovery to happen in the Japanese economy. Moving on to the European trading session, we got the final CPI numbers. We will not go into the details of that as these were final figures, and it have only confirmed that the euro area has entered into the deflationary zone. Moving on to the Bank of England's rate decision, here also as expected, the Bank of England left the interest rates unchanged at 0.1%, and also no change has been announced in the quantitative easing program worth UK pound 745 billion. So Bank of England is one more central bank which has not made any changes in its monetary policy, and it has followed in the footsteps of Federal Reserve and Bank of Japan earlier. Just a while back, we got the initial jobless claims for the United States, and here this is the third week for the US where its weekly jobless claims have been below 1 million, but still, these are actually quite bigger number if we compare and see it in the context of the Great Depression suffered in 2008. Even in those times, the highest was reached just above 600,000, and now here in 2020, we are seeing week after week the figures coming in around 1 million, and now for this week, the week ended 12th of September, the initial jobless claims stand at 860,000. Now let's move on to the technical aspects of today's trading session. We will first consider the Euro USD, and then we will move on to the dollar index. Let's start with the Euro USD's technical outlook. This is the daily time frame chart, and here you can see this bar long pin bar in the Euro USD daily time frame chart, because we saw the sharp moves in Euro USD on both sides. At one point in time, the Euro USD had gotten pretty close to 1.17, but from those levels, it has recovered to some extent, and now for the time being it is hovering close to 1.18. But after this sharp move on the lower side starting from around 1.19, I feel that near term trajectory has changed for the euro USD, and it's just a matter of time where after due consolidation we might see fresh moves on the bearish side. So I feel it is important for us to stand ready and see what are the optimum levels which we can target for short selling opportunities. So for that we will consider the 4 hourly chart, and here coming to the pivot point series, we have the price action taking place below central pivot point, which is indicative of the fact that bears are having an upper hand here, and after these multiple efforts to cross and hold above this central pivot point, which was there around 1.186, we saw this sharp reversal, and now we are pretty much looking at the possibility where in due course of time the euro USD might even break below this first support of this month's pivot point series. We have the formation of lower lows and lower highs in place. So after due consolidation, the possibility indeed remains pretty strong. The regression curve is almost flat, and I feel, given the fact that price action is on the lower band of this regression curve, we are going to see it bending on the lower side in a couple of sessions. Coming to the lower time frame chart of hourly, here we have the strong resistance zone shaping up around this confluence zone of 50, 100 and 200 SMAs around 1.183 to 1.184. Here we also have this death cross, the 50 SMA crossing below 200 SMA, and that is one more factor which confirms the bearish trajectory of the euro USD from short to medium term perspective. And I feel that now we can utilize this immediate swing high, the yesterday's high, which is there around 1.188, as our immediate stop loss level. And if we use this as our immediate stop loss, then of course from the current price action level of 1.18, it is almost 80 pips away, and because of that we might to sit on the sidelines for some time and allow the consolidation to unfold in the euro USD, as we will be more than happy if we can get any entry anywhere close to 1.183 to 1.184, and as long as the price action is remaining below this 100 SMA zone, I think we can continue to target for fresh short selling opportunities in the euro USD while trying to optimize the risk reward ratio. Suppose if we are going in for any sell trade anywhere close to 1.183 while keeping the stop loss just around 1.188, we can pretty much target 100 pips or even more than that on the lower side, as our targets will be coming in the vicinity of 1.17. So here we will get the risk reward ratio which will be markedly better than even 1 is to 2. Now let's see how things are looking like for the dollar index. It's been a while now where we had considered the dollar index last time. So here this 161.8% Fibonacci expansion of its prior fall has given some room on the lower side for the dollar index to recover after these substantial losses, and we have seen almost 1.5 months of consolidation closer to the 92 levels for the dollar index in last couple of weeks, and the formation has been pretty interesting. We are seeing identical highs being formed here, and now that dollar index has been in the consolidation range for long, we can indeed expect big move happening in the dollar index. So from that point of view, I think we can indeed focus on the dollar index to see if there are any emerging opportunities for us on the lower time frame. And here coming to the 4 hourly chart, we have the resistance shaping up around 93.5, because we have the first resistance of this month's pivot point series, and on the lower side we are seeing the central pivot point around 92.7 to be acting as the immediate support for the dollar index. So here we saw this consolidation and then due reversal, but the movement on the upside hasn't really sustained itself, and we saw sharp losses also. And now the dollar index price action is taking place pretty close to this middle point of regression curve, which is increasingly bent on the upside. So I feel that dollar index might again retry to cross and hold above this first resistance zone of this month's pivot point series, and if that is were to happen, we should be in position to profit from that scenario. And here, coming to the hourly chart, we have the confluence zone of 50, 100 and 200 SMAs, as well as we have the price marker of these prior swing highs, which I am expecting to act as a near-term support for the dollar index. So here we are looking at a good probability of making money in this trade, and of course our anticipation can go wrong. In that case, we will have to live with the stop loss whatever it will be. So here I think even the current price zone is good enough to look for some trading opportunities on the long side, and if we indeed we see some break on the lower side, we can do some averaging after consolidation. But right now the price action in dollar index is indeed looking uh, promising, and if we see the dollar index holding well above this confluence zone and this prior swing high, then we will have more reasons to believe that this consolidation has provided the dollar index the platform to rise after duly holding above this support zone. So from that point of view, I think we can target this prior swing high and even beyond that. And on the lower side, we can utilize this prior swing low, which is there around 92.8 as our stop loss for any entry close to this confluence zone of around 93.10 to 93.2. We can keep 30 to 40 pips of stop loss, and on the higher side we can target almost 70 to 80 pips. That will give us the risk reward ratio of 1 is to 2. So here this is the opportune time I feel for the dollar index bulls, and in due course of time we can indeed expect the price to move towards 94. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.